Well, U.S. Treasury futures mildly for sale across the curve. 2s and 5s, yields are up about 1 3/4 to 2 basis points. 10s up 1 to 1 1/4 basis points on the day. A lot of it has to do with a stronger dollar, also risk-on mode in the stock market here in the U.S. The big news today was, of course, the CPI number that came out. Core CPI came out exactly in line, up 0.2% month on month. The headline was 0. That disappointed slightly. Consensus was looking for a gain of up 0.1%. There was an initial knee-jerk response to lower treasuries, but since that time, the market has kind of consolidated and gone back to where it started in the morning. Overnight news, actually not very good. I mean, Japanese PPI disappointed. UK CPI number was much weaker than expected. And lastly, European industrial production disappointed consensus. But all three of those things didn't do a whole lot to the market. Treasuries have stayed in a pretty narrow range. Overnight volumes were strong though, 95% over a 10-day average. 10s took down about 30% of that volume, second to the 5s that took a 35% share of the market. All that to say, people are now digging deeper into the CPI number, even though it came out, at 7:30 Central Time, looking at things that the fact that headline did beat, but the core didn't, or vice versa, the core was in line, but the headline disappointed. Energy was down quite a bit. Food and wages were up. So traders right now consolidating in all of that, saying what's the next move for treasuries. I think a lot of that's going to have to do with a fundamental change in FOMC language or something coming out towards Brexit or the Eurozone, because right now we are contained in a very tight trading range.